Welcome back. Well, the markets continue to hold strong as we speak, and we're heading into the last 35 minutes or so. Just take a look at TVS Motors. You know, that numbers come up for you on the screen. It's not a cheap stock. You know, they're making some moves in the EV foray, and the street loves those numbers. Exports up close to around 85% on a smaller base. The headline number as well was up close to around 33%, I think so, if I saw those numbers correctly. And the stock is just flying away. The beat in comparison to our poll is around 4%, you know, in comparison to what we were estimating. But we almost have a 4% move on the stock, 3.5% in bulk of that move coming in the last few minutes. Metropolis as well as moved higher in the last few minutes. So there are stocks doing a thing of their own. TVS reacting to its numbers, spiking up, Metropolis pulling back. On the flip side, Whirlpool, you know, I think the global head said it, right? The stock is not very cheap, so they're taking some money off the table. Investors are here as well, taking some money off the table. Stock moves back to the low point of the day. Let's get in Jigar Mistry, co-founder at Buoyant Capital, who joins us on the show. Hi, Jigar. Good afternoon. Good to see you in. Jigar, I have to ask you about metals. What's going on today? Have you heard something? You know, 10 years ago or so, I would have called you in your earlier avatar on the sell side and said, Jigar, what's going on? And it's not even November when normally, you know, the conversations are very, very exciting because you're getting into that new year. People buy in November, sell in February, and you're packed up for the rest of the year. Have you heard anything overnight?
Hi, Nigel. Yes, and I would have told you 10 years ago that, you know, China, all the whispers have started again. They're trying very hard to sort of get their ducks in the row. Coking coal prices a week ago started firming up. Iron ore looks like it's going to go up again. Steel prices are not on the move just yet, but then that can happen at any point in time. Steels are cyclical, so might as well, you know, sort of buy the rumor and then sell the news. So pretty much how that conversation would have went, Nigel.
Okay. All right. So Jigar, hi, afternoon. So what's happening? You didn't answer the question.
Yeah. You told me what you told me 10 years ago. What about now?
I think he's saying that he'd say the same thing. Jigar, is that it?
He'd say the same thing. Yeah, Prashant and Nigel. Absolutely. So see, I think with a lot of these steel names, like I was on your studio a few weeks ago, and then we discussed that in the era of, you know, these sort of super cycles being taken away, all countries have created walls of their own. So essentially, everybody is now sort of trying to pinpoint what news you can trade. In that scenario, you know, given the flow of money that's coming in the sector, that's not run up a lot, not really expensive vis-a-vis its own sort of historical valuation. So it might make sort of sense to just play this out, looking especially at how the raw materials have moved. So I would say fundamentally nothing really changes. But yeah, sort of if China gets its act together, then there is some amount of money to be made with a cyclical name like this.
Okay. You know, we want to talk about hospitals next, right? I mean, stocks sold off yesterday. They are down sharply today as well. Now, this is a space where it's a secular kind of story, right? I mean, high quality healthcare services are going to be much in demand over the foreseeable future. And you know, most hospitals are doing very well. It's also getting more organized across the board. But the Supreme Court, of course, has stepped in. Regulatory interventions, remember, over the last couple of years were going down, but it seems to have sort of reared its head once again. And it's leading to nervousness. The Supreme Court is asking the center to kind of fix standard rates across procedures. And it's said that if you don't do it, we will do it. As an interim measure. Ekta is here with what the latest is, because I think Max, for example, is down from 900 to 700, and some of the others have also seen a 15-20% knock. Ekta, what's the latest?
Well, I'll start with Access, which was written on it. There was a blanket implementation of the CEA, Clinical Establishment Act, according to them, will be difficult. The possible outcome is that the central government proposes to the Supreme Court to form a committee of representatives from state governments. Building a consensus across various stakeholders could take several months, if not years. The overhang to remain on the hospital sector till some clarity emerges. Jefferies, they believe the litigation is at an early stage. It's unlikely to result in any near-term adverse outcome. Adverse news flow is not uncommon for the sector and has not always come into effect. CLSA, Supreme Court directing standardization of rates, is negative for private hospitals, albeit difficult to implement, but they retain their outperform on Apollo hospitals with a target price of 7,000.
Ekta, you know, the court said that we will step in and as interim measure, we will prescribe rates. I mean, is that something which these brokers ultimately all this consensus happens and they decide on something, as you say? Some of them are saying it could take a lot of time, but this I think what's also caught the attention is the court is saying we will step in.
They are saying that they'll apply the CGHS rates in the interim until unless the government moves in the next couple of weeks.
Yeah. So that's the big one, right? I mean, if the court steps in and prescribes, then I mean you can keep sort of arguing and building consensus, but the rates fall to the CGHS rates, which are sharply below what private hospitals charge right now. Thanks very much, Ekta, for that. Jigar is with us. Jigar. I mean, if you, I don't know if you own any of these hospital names, but if you owned any of them, and how would you react to something like this? Would you keep the faith that ultimately this will be resolved, or this is serious enough for you to exit?
No, we don't own any of these names, Prashant. But see, it's anything that gets into a regulatory hurdle sort of is very difficult, right? Because think of it, as far as the government is concerned so far, there has been a fair amount of understanding that they're trying to back off everything that can be market prescribed, right? So you look at increasingly, they are making a lot of rules very, very well known, and then they're just stepping back saying, we'll let the market take care of itself. But if it gets sort of into the Supreme Court trajectory and then that directs the government on how things need to be addressed, then until sort of the situation is resolved, you don't really know how, the valuations react. So like we say, right, that all stories are basically the numbers of today and some story for tomorrow. Now, if the story for tomorrow does get impugned, then you don't really just depend on what the numbers for today are. So I think, but I think the bigger question, Prashant, is that how many of these sort of similar businesses are really there wherein the greater public good, something or the other could emerge because, of some litigation that's going elsewhere. So I think that needs to be taken into cognizance as well. I think it would be very difficult for anybody to keep owning these businesses, keeping the faith on.
That's hospitals, quite a bit of regulatory overhang there, given the statements that have come in from the Apex Court. By the way, this is the charge of the Light Brigade, really. 350 points on the Nifty. There's just no stopping. There's a full half an hour to go before the week and the day closes out. Actually, 2 more hours tomorrow. Correct. Week doesn't close out tomorrow. I stand corrected. But till, Monday to Friday at least close out, and that is a very solid looking screen. Jigar, hi, good afternoon. Just wanted to get your sense on two-wheelers because those numbers are looking very, very strong even now. Bajaj Auto's numbers, two-wheeler numbers, up 25%. We just had TVS numbers. They've done about 34% on two-wheeler sales. This is, February over February last year. And it kind of defies everything else that we keep hearing on, rural demand, etc. because a lot of these bikes are being sold in rural areas and they're doing exceedingly well. Now, the question is on stocks, because stocks have also moved quite a bit. Would you still be a buyer? And let's throw in a word on CVs as well, because that's the laggard side of the cycle, and that doesn't seem to be picking up. So would you prefer CVs as a dark horse play, or would you stick with the winners in two-wheelers?
So no, I think a particular month number is sort of a base effect as well that one needs to take into consideration. But if you take the broader trajectory, then I don't really think we are into a zone where we are showing significant increase in volumes. What's happening is that the commodity prices have been benign so far, which means their contributions per vehicle have gone to almost historical highs. And the market seems to be forecasting both things, right? One, they seem to be forecasting that all incremental volumes. So if you take analyst estimates, most of them are projecting 80% of the next 5-year sales in two-wheelers will be EVs. So the market seems to be believing that all that EV will be equally as profitable as ICE, which cannot historically be true. Now, if you take a day like today, your NSE metals index is up 3.5%, but at the same time, because of these numbers, the auto names are up as well. So I think given the disruption, given what's really happening, two-wheelers doesn't really fit the bill very well as far as we are concerned. CVs might make the cut, but again, given where you see the sort of staples demand coming through, there have been all 2-3% growth numbers. So I think even CVs, I think the best way to play this is through auto ancillaries, where you don't really see a lot of disruption play through. a lot of ancillaries are present across the spectrum, right? So CVs, sort of two-wheelers, and then you can pick up a bouquet of services that some of these offer and then play it through that. I think our historical play has been through an auto ancillary rather than the OEMs per se.
Okay, you go. Simple question. What are the top buy calls? Name a couple of stocks.
Right. So I think banks per se, Nigel, are not looking too bad.
I was actually, Jigar, I was going to ask you about that call on Max because y'all had got it very, very right. I recall when you were explaining to us on a couple of shows, valuation-wise, it's in favor. The stock has done very, very well from there. And even after this rally, still valuation-wise is cheaper. I think a brokerage put out a note. If I'm not mistaken, I think the stock was at 600 when you were quite positive on this name. So fill us in with that, a view on that, and if there are any other picks that you want to talk about.
Right. So I think, yeah, Max Financial is also sort of something that I think the first show I ever did with Prashant maybe 7 odd years ago, 5 years ago, was on the stock of Max Financial. And then we've continued to own that name pretty much since then. I think the first part of the play, Nigel, was the run-up because of a valuation differential. And then generally life insurance penetration has not really been very bad. And therefore, that sort of continues to be a reasonably decent play. In between number of budgets, sort of you have seen some things play out, other things don't. And then I think they continue to do reasonably okay. So that's a name that we continue to like. But I think increasingly, you're seeing a lot of private sector banks, especially the capex focused ones, I think are now in the focus. So 2012 to 2021, we saw all incremental lending happen through PLs or sort of personal loans. 2021 onwards, the capex cycle has picked up, but all of that is not yet funded through banks. And only now, that sort of funding is gathering the momentum. So I think capex-focused banks, corporate-focused banks are the ones that look the best. So those are the ones that I think we are getting a lot more overweight on now.
All right, Jigar, great chat as always. Appreciate you joining in and running us through that perspective. Thank you very much for joining us. Have a good weekend. But I guess you'll be working tomorrow. I think we've been
so will you.
Stumbling on that.
I think, yeah, we're just kind of still getting around to it. Acceptance will come. Eventually it will. Thank you, Jigar, so much for being with us today.
In case you're not working, Jigar, we are just telling our team to connect you. So tomorrow we'll see you on the show well. 11 a.m. is when we'll like your views.
Sure. Thanks.
Okay, all right, Jigar. Thank you very much for joining in. Well, we do have to take a quick break.